Welcome to Endgame Finance. Today, guys, I want to talk to you about Tesla. Tesla stock is in big trouble. Over the next week, I expect Tesla shares to drop up to 20%. And today we're going to discuss why this is going to occur. I've been following Tesla price action pretty closely. And recently, I've been noticing huge volume during sell-off days. Now, price movement in any certain stock will just tell you a certain amount of information. Better insight into stock movements can be seen by volume. How much of the stock is actually sold? Basically, if a stock is being sold with extremely high volume, that spells trouble. And its opposite is also true. If stock is being bought up with huge volume, it means something good is happening. However, something bad is going to happen to Tesla. Just judging by the amount of volume during Tesla sell-offs recently, it's looking really bad for the stock. Now, let's look at this article that gives us a little bit more insight. Tesla deliveries expected to fall on planned shutdowns and soft demand. Tesla may miss estimates for third quarter deliveries due to planned factory shutdowns and soft demand that led the automaker to boost discounts. Now, many analysts are blaming this weakness on downtime at the automaker's plants in Europe and China to upgrade the equipment and prepare for the production of the updated Model 3 and the Cybertruck. So this might not be such a bad news. This soft demand will probably occur because the factory is shut down for retooling. So Model 3, updated version of Model 3 can be put out at the same time Cybertruck is coming online. So I see this Tesla crash to be only temporary. I see the crash only really impacting the stock in the next few weeks. However, I see this crash to be substantial, but the retooling could help power a strong fourth quarter to refresh its aging vehicle lineup with the models that could compete better with offerings from US rivals such as Ford and BYD. Where Tesla is priced like a growth stock, it's expected to continuously produce results. It's expected to continuously grow. So a miss is really bad for the company overall. This company is valued as a tech stock, and tech stocks are expected to grow non-stop. They're expected to have higher earnings, higher deliveries, quarter over quarter every single year. Tesla is expected to have a 1.6 decline in deliveries from the previous quarter. That would mark the first sequential decline in Tesla's deliveries since second quarter of 2022. Some analysts said a disappointing report could spark the need for more price cuts to drive sales in the face of rising competition and a broader slowdown in electric vehicle demand. It's not a supply issue. Demand signals remain weak. We would expect price cuts to be needed in the future quarters. So more price cuts means lower margins. Lower margins means less cash. Less cash means lower profitability. Lower profitability means lower growth. Lower growth means lower stock price. So these are really compounding negative effects for Tesla stock that are really going to be reflected over the next few weeks. This would come at a cost of Tesla's industry-leading margins, which already plummeted to a four-year low in the second quarter due to price war companies started in January. So Tesla has been slashing prices constantly just to drive up this demand. And I think they really want to get rid of their lots a lot. They want to get rid of their old Model 3s before the new refreshed model is introduced and made available to customers to purchase. However, in the third quarter, Tesla slashed prices of Model S and X by 14 to 21% in main markets, China and the United States. It also increased discounts on Model 3 and Model Y as much as $5,000. Now, discounts on Model S and X are very troubling because those were some of their higher margin vehicles. However, I believe that Rivian has really eaten into the demand of these vehicles of the luxury segment. The company also cut its production plan at its German factory amidst soft demand. However, there is optimism for fourth quarter. Some analysts believe Tesla could rebound in the last 3 months of the year thanks to the updated Model 3. The restyled variant comes with a high price and is expected to launch in Europe and China in the fourth quarter. Early reviews of the refreshed Model 3 have been positive, and changes in wait time suggest that demand is strong, particularly in China. The updates will provide a boost to demand during the challenging environment. So I really expect this huge drop that's incoming in Tesla stock price to be very temporary, at the most for a few months. I see Tesla stock really rebounding in the next year, especially the first and second quarter of the following year. I think that's where Cybertruck will be in full production. That's when their sales will just increase so much because of the refreshed Model 3. And I also see potential for Tesla self-driving to just really take a huge leap forward in the next 6 months, just because growth in that segment for robo-taxis and or just self-driving, it's very exponential. So in a matter of months, they can really have something huge, something very big, especially if the updated Model 3 has a new computer on board. They can push these software updates over the air, and overnight you can just have a self-driving fleet. Self-driving fleet will drive demand for Tesla vehicles just through the roof. So I'm really excited about Tesla over the next year. However, in the next few months, I'm really not that positive or bullish on this company. Some investors are also optimistic about Tesla's prospects in the face of auto workers' strike at the Detroit 3. The strike against Ford, General Motors, and Stellantis is close to entering its third week. And any cost increase from a potential new contract with United Auto Workers Union will pile pressure on the legacy automakers at a time they are already losing billions of dollars in their EV business. So Tesla's competition is very weakened. These strikes at all these other automakers have really benefited Tesla, and they really slow down production of EVs at every other company. This allows Tesla to capture more and more market and to brand themselves as a legacy, to brand themselves as a standard of the industry. So that's it, guys. Temporarily, I see Tesla stock just cratering, especially next week and the following weeks after that. However, I do see some consolidation recovery in the fourth quarter, and I see a huge potential for next year for Tesla stock to reach all-time highs. If you guys have any questions or disagreements, let me know below. Guys, like, subscribe, and as always, have a great day.